It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Wednesday evening, June 3rd, 2015. A happy hump day to you guys and gals. A wacky, wacky Wednesday here today. Before we jump into tonight's newsletter charts, I do want to remind you a few important things. I teach everything that we're going to talk about tonight in our newsletter to all of our students here at School of Trade. Check out schooloftrade.com for more information, and of course, we have a great free trial. We'll talk more about that on the way out at the end of this video. Before we jump into charts though, I do want to remind you guys, make sure you're watching this video on our trading blog right now at sidewaysmarkets.com. There's a link right below the video in your YouTube channel if you're watching it on our YouTube page. There are 3 reasons why you want to navigate over here to sidewaysmarkets.com. 1, you can download all the charts right below the video. Every chart I'm going to show you tonight in the video, you can download and have that handy for you tomorrow on your own schedule. Second thing, upper left-hand corner, I've got a free pass for you. If you're not a member of School of Trade and you'd like to get a free pass to test drive our live trade room as a member for a day, I'd be happy to give you guys a free pass. Grab that free pass, upper left-hand corner, for all the guests out there that aren't members of School of Trade. And last but not least, lower left-hand corner, I have a nightly newsletter mailing list. I would love to send you an email every evening when this newsletter goes live. All I need is your name and your email address, and I'll send you an email so you know it's ready to watch the newsletter. Guys, if you register for the newsletter list or if you grab your free pass, make sure you register. Make sure you check your inbox. I'm going to send you a verification email. That way you can give me approval. So make sure you check your inbox if you register for the free pass or our nightly newsletter. And don't forget, download those charts for tomorrow. You ready to rock and roll? Boy, was it a wild one here today. Boy, was it a wild one. We had meetings on crude, meetings on the ECB. Prices moving well here today in a very volatile Wednesday ahead of Friday's non-farm payrolls. Let's jump right in here, guys, for our Wednesday edition of our nightly newsletter. Well, I said it last night. We'll start with the euro. Anybody can put together a one-day rally, but you got to hold the pullback, and that's exactly what these euros did. We go up. They pulled back, right? We were looking for short-term selling opportunities in last night's newsletter and then waiting to see if they were going to hold that pullback. Oh, they definitely held that pullback. Draghi just fanning the flames today, talking about how well the QE is working. He really didn't say very much. I think the majority of people are optimistic about Greece right now. Whatever the reason is, we focus on the chart. We don't care why. All we care is what and where. And I can see euro is bullish this evening after comments from today's ECB meeting. We held the pullback. Now, bears, you guys can use this overshoot of this bull channel to sell off these highs. Remember, the easiest way to sell in an uptrend is to wait for bulls to try and fail. So as we pull back, wait for the bulls to try and fail, and that'll give you a shot here to get the easy money selling off the high of this bull channel. So right now, bears, you guys have a good shot here. We got that bull channel coming higher on euro right now, and that bull channel, you can see we just barely poke our head out there. That overshoot tells us, what does a channel overshoot like this tell me? It tells me that the bulls have all their chips in the middle of the table. They're fully committed. The only way this price keeps going higher without pulling back is if other time frame traders get involved, right? Some daily chart traders, some weekly chart traders, some slower time frame traders who may have been on the sidelines here so far. So more likely here we pull back to those key support levels. So sellers, you got to get to it quick. If you're going to be a seller at these highs, I would recommend if you're a seller, you wait for buyer failure opportunities. That way you're selling into those bulls stop losses, right, which will help launch you down as well. So wait for the bulls to fail if you want to sell these highs. If you're a bull right now, though, you guys have to stay patient. I can't recommend buying the overshoot. You're buying at the highest possible price. So I would recommend waiting here for price to pull back. You've got some key levels of support waiting for you guys here. Now, overall, the typical overshoot is going to tell you to expect an overshoot at the low, right? So the overindulgence by the bulls, they've got to take their profit. There's going to be some bargain hunters up here for sellers, and so that will usually cause this first pullback to fail. So I would definitely be looking for extra confirmation at the 1185 to 1160 area if you're a bull, and then again, you've got support levels waiting for you below. I would not be surprised at all, though, if we make a run at those lows before pushing higher again, but there's a lot going on right now in the ECB, a lot of news chatter back and forth, and it feels like today it definitely caught up to this market. So obviously bullish in the long term right now after we hold that pullback. And again, buyers, you guys have control, so stay patient, wait for those pullbacks, but be a little bit suspicious of that pullback, that first pullback, because of that overshoot at that high. And sellers, you guys know the plan. You better get to it quickly here before you miss that opportunity. How about gold? The yellow metal, the GC. Yep, finally hit that bear target we talked about in last night's newsletter. No doubt about it right now. I was pleasantly surprised to see such good action on gold today. Remember, we got Friday's non-farm payrolls. Usually, and tomorrow's Thursday, so you're going to start seeing that Friday non-farm payroll, possibly the biggest news we have every month. And of course, everyone's watching it. Monetary policy will be changed because of it. So gold's going to be impacted by Friday's non-farm payroll. Today we heard from the ADP. Wednesday mornings ahead of non-farms, we heard about 200,000 is what they're expecting. So right in line. So it really didn't catch anybody off guard. I'm just happy to see we're actually getting some movement here on gold, because usually we're going to be dealing with a little bit of paralysis ahead of that non-farm payroll report on Friday. So tomorrow is one more day closer. So again, I wouldn't be surprised if we see a little bit of sluggishness on the gold ahead of that major news on Friday. Gold is bearish, oversold now, all the way down at these range lows. Remember, we talked about this earlier this week. We talked about how we were going to be selling those highs, and the target was, right, we gave you guys two targets. One was this low here, and the other was the major range low. That now is a measured move, as you can see, going lower here. So definitely keep an eye on that we'll call it 1170 area, 1169.8. We're definitely bearish. We have a long-term bear channel that's been broken. We have successfully retested those lows. That just puts a stamp of approval on it. The bears are definitely in control here. And now, in addition to this measured move, you also want to be keeping an eye out for another measured move, which will probably line up right about the same spot here. Let's take a look at that real quick. It will probably line up. Yeah. So if we happen to rotate off these lows, which is most likely going to happen, then you're looking at a measured move pretty much the same spot. Keep an eye on that 1170 area, 1169.8 area, right, for another measured move. It's difficult for me to project out that short-term measured move because we haven't seen the A, B, or C yet, right? So again, keep an eye out for that secondary measured move as you go lower, and keep an eye on that 1169 area. That will definitely be a likely target here if these bears can really get pushing this, and if we don't run out of time before we get to Friday's non-farm payrolls. So sellers, keep in mind though, you're oversold right now. Very aggressive to be a seller right now on gold. So stay patient, wait for price to get up off these lows. At these highs, wait for the buyers to fail and sell it, or look for a reversal pattern and sell it, or wait for price to make the turn and then sell those rips on the way down. Whatever you do, though, stay patient for the bears out there on gold, because you don't want to get caught selling these lows right now. The buyers are going to be looking for bargains here. So if you're a bull right now, I'd be looking, again, this time we're in a downtrend. We talked about the exact opposite on the euro. On gold, we're in a downtrend. If you're a bull in a downtrend, and there are many reasons why you may want to be a buyer right now. Maybe you think we're going back to 1200, right? There's many reasons why you might be a bull right now. If you're a bull in a downtrend, the best way to do it is look for opportunities where those sellers tried prematurely and fail, right? So as we're going higher up towards that high of that little short-term channel I drew in, you can look for those sellers to try and fail, and that'll be your best opportunity, because you'll be able to buy into the buy stops, right, of the bears. Remember, only way to get out of a short trade is to buy your way out of it. So wait for those sellers to commit, and then right where they get stopped out, that's where you're going to get the best opportunities here to be buying long. Bears, you guys have control right now on the gold. Just stay patient here. And again, don't force it on gold here as we go into Friday's news. Let's keep moving. How about that S&P? How about that S&P? Last night's newsletter, we talked about the fact that until we got and stayed below what we call the line in the sand, we had to continue to be bullish. And as you can see today, we are very clearly here rotating from that low. Remember I told you earlier this week, remember I said yesterday, that fake break of that low, that little bear trap that we saw yesterday, we talked about it last night. What did I say last night? When we see that fake break of that low, remember the first breakout oftentimes fails, and then of course they're going to try to rotate this back to those highs. So just like we talked about last night, it's exactly what's happening right now. The only thing we have to worry about is that we're right smack in the middle of this little short-term range here. So as you can see, it's definitely a little bit sloppy in this area. Bottom line though, S&P is bullish, rotating back up to the range highs. Bulls, you guys are going to want to keep buying pullbacks in the short term. Use those support levels on a faster time frame. I'm going to give you a couple of them in a moment on a secondary chart here. So stay tuned for that. And the bears, you really need to stay patient right now. If you're a bear on the S&P, the same thing we talked about on the euro. You want to wait for those bulls to try and fail, right? So you're waiting for pullbacks to fail so you can sell it back down to that range low, down around that 90. And again, you can use these as targets here if you're a seller. But hard part right now is going to be if you're a bull, the best tradable opportunities are going to be, if you're a bear, the best short selling opportunities are going to come right in the face of those bulls as they're buying pullbacks here. So find those areas on your chart and look for buyers to fail so you can, again, sell directly into those bull stop. And of course, if you're a bull right now, you have the easy job right now. You're simply buying pullbacks on the way up to range high targets and of course major range high targets. You got to remember, we have a long-term bull channel here, and that long-term bull channel, which we've been watching for weeks now. Maybe not weeks here, but a week and a half here. And of course, the goal of this, once they held that low, is going to be to run this sucker back up to these highs. So bulls, you guys have control right now. Stay patient. Let's zoom in though a little bit closer. Let's go take a little bit closer look here at this area right now on the S&P, because I think that's where you're going to really be focused on tomorrow. And as you can see here, we have this little short-term bull channel. I cut that S&P 8 anchor in half. This is an S&P 4 anchor. You can see the bull channel. The midline lines up nicely on it. So you're going to want to use this channel as your main focus here. We have a measured move coming off that reaction holds, ABCD, measured move resistance, extension resistance. Those can definitely be used as some easy targets. And of course, we know that we have that range high, 1975 or so, as another target. I also have another short-term channel. This one's not as strong, but it's more recent, if you will, right? It kind of uses these highs, lines up with these lows. So this is just another opportunity for you to find some more support areas on kind of a secondary. It's more recent, so recency is always more important than anything else. So that'll give you some opportunities here to be a buyer. So as price pulls back, buying channel low, buying channel low, buying range low, right? This is a little short-term trading range. And then, of course, if we happen to make it down 90s, 99s, 97s, buying that area as well. Again, if you're a bull, stay patient, wait to buy at support. If you're a bear right now, look at those support levels and wait for price to fail. But remember, look for buyers to try. You know where their stops would be. That's where you'd put your stop. And right where they get stopped out, that's going to be your easiest money to sell in this bullish trend right now on the S&P. Don't forget, all these charts will be available for download right below the video. And then wrap it up here with Mr. Crude. What a crazy day we had today. Holy smokes. API number came out last night. DOE number today. Pretty much right as expected. Everything's playing out pretty much as we expected it to right now. There's really no surprises here. What would have surprised me was when we heard about there of course is the OPEC meeting going on this week in Vienna, and they're basically saying they're not going anywhere near the idea of cutting production. In fact, I heard specifically today off the news wires that the only options they had on the table this week so far were to either increase production or leave it the same. And for all people who skipped economics class, increasing production right now is not going to help the price of crude oil. Leaving it the same, the rig count has really dwindled off here. We're not seeing that downtrend in the rig count. I think a lot of people in this industry are kind of hunkering down right now and dealing with these lower prices. We can't seem to get away from $60 a barrel. So we have no reason to think fundamentally or technically that this is going to be a bullish market. Again, I talked about this beginning of the week, late last week here, beginning of this week. We saw overshoot of that channel low. None of us were caught off guard by this move going higher here. I've been talking about it for the past 3 days. I thought it would go a little bit higher than that, but hey, I'll take it. The lower high here, and again, as we came back into the range here, buyers trying and failing, it's an easy selling opportunity off this long-term channel high. So again, nothing really new here right now. We're bearish on crude, coming off the highs of the channel. Now we have the difficult part has been covered. Bears, you guys have to be careful right now because as you can see, we're right down at that range low. So just stay patient. Wait to sell retracements. Wait to sell at resistance. Right now, bears, you guys are at support right now. So if you're a bear right now, only thing, well, I'm going to zoom in a little bit closer in this area on the next chart. So we're going to go into that a little bit closer in a second here. So not to worry, I'll dig into that a little bit deeper. But you can see though, we're sitting right at this range low. So if you made your money selling off that lower high, waiting for it to collapse back in, I don't blame you. That's what our plan was from last night. Now you've got to take your money here at these lows, wait for price to get up off this low, and again, sell in a downtrend. Don't sell at support, sell at resistance, and we have a long-term target. Maybe it's tomorrow. It wouldn't surprise me, but it's, we're talking $60 a barrel right now, down to 56. It's going to be a big jump for crude. We haven't seen those big ranges the last week or so. Who the heck knows, right? Who the heck knows? We've got a meeting going on among OPEC leaders. The oil minister out of Russia is there, right? I'm sure that's a fun party, right? I'd love to be a fly on the wall in that room. But the reality is we're bearish. Sellers, bears, you guys have control right now. Selling at resistance. And if you're a bull right now, you probably got a decent shot at this thing. You're down around those lows. So, you're at support right now. I think you're really aggressive being a buyer right now in the wake of what we're hearing coming out of this meeting in Vienna. But hey, who am I to say? So we definitely have opportunities. Very short term though for you bulls out there. And remember, in a bearish downtrend, if you want to be a bull in a bearish market, the best place to do it is where the sellers try and fail. So I would definitely be looking for, if we do go up and sellers fail, there's your chance to buy it. You get some targets waiting for you overhead if that is the case. Remember, bears in control. Stay patient here for those best selling opportunities up at resistance. Let's zoom in here now on this area right here because it's easy to see that we have a bit of a Chanel here forming as we come out of this range here. So I want to dig into that a little bit closer because that's where we're going to get the best opportunities here for tomorrow. Not a really great looking chart, but it definitely gives us reason for me to say once again, bears, stay patient here right now because you can see here, trading range is one thing. We're down at the lows of that trading range. That tells me we're going to expect this price to want to rotate off those lows and then give us another selling opportunity at that range high. We've got resistance areas overhead, a little bit of a midline there as well. So we'll definitely be looking for selling opportunities at those resistance areas overhead. But also too, if we just roll over and go lower, then we're really in oversold territory at that point. So I really think you really want to wait here for a deeper correction before you start getting aggressive selling this right now. And again, the reason I say that has two reasons behind it. Normally I'd be looking for a breakout retrace to sell this thing down, but remember, we were bullish going into this range here, so I got to stay patient. This is what really tells me to be patient. You've got an ABCD completion right here. It's a measured move. So trying to sell right now, again, like I've been saying, I'm a broken record here. Be careful being a bear right now. Be patient being a bear right now. Wait for price to get up off those lows. Wait for the buyers to try and fail and sell it, or wait for a reversal pattern and sell it, or wait for the price to make the turn and then sell those rips as it's coming down off that resistance. Another thing to be aware of is this, like I said earlier in the last chart, is this little channel you can see forming here. Midline right up the middle here. So again, you got to expect we're going to come up off that channel, resistance, resistance. Guys, in all reality, do we really care as bears where we get short? I don't care. I really don't care. When I go cash my paycheck at the end of the week, the banker doesn't ask me, so where did you sell this thing, right? All he asks me is, holy Christmas, what are you doing in that office all day long, right? Nobody cares where you get short. So stay patient, make the easy money. And if you want to make more money, like I always say, don't trade more often, don't trade more aggressively, don't trade more patterns, just trade bigger size. And you get bigger size by following the plan that we give to all of our students here at School of Trade. So bears, stay patient out there. Bulls, again, it's aggressive, but you got a real short-term opportunity here back up to those range highs. Just be careful. Take that money quickly because you're trading counter trend here, guys. Also, targets waiting for you below, targets below, targets below. I would definitely have my eyes on some range expansion targets. It's a pretty well-defined trading range. Copy paste on the way down. Those will make for some easy targets, guys. Tomorrow, we've got the meeting in Vienna continues. We're probably going to keep hearing about this soap opera from Greece tomorrow. We've got jobless claims early in the morning, as if anybody pays attention to that anymore. We've moved on from the jobless claims report to the JOLTS report, right? Thank you, Miss Yellen. I love you. I love you for it. So stay focused tomorrow on the plan. Be patient out there if you're a bear or a bull, depending on which market you're trading out there. Wait for those proper high percentage setups. And as I always say at the end of these videos, you might be alone at your computer right now. You might be alone watching this video right now, but please remember, you're never alone in your trading career. We provide trading plans, all the strategies, all the tools, and of course, we get a great live trade room and a chat room open for thousands of members 24/7, 365. Head over to schooloftrade.com and get a great free trial. You can join that trial by clicking that button right in the middle of the page. You're going to learn more with me in 1 week on my trial than you will anywhere else on the internet, so I'll tell you that much. We have 3 levels of membership: beginner, intermediate, and advanced. And please don't be bashful. I've got someone standing by here 24/7 to give you guys a hand with anything you may need along the way. Guys and gals, it's a beautiful day here in Los Angeles, California at our corporate headquarters, School of Trade headquarters in LA. Hope you guys are having a great summertime Wednesday. Hope you had a great hump day. Follow the plan. I'll see you guys tomorrow, 8 a.m. Eastern time in my trade room. If not, 8 p.m. Eastern time tomorrow evening, same time, same place. Now get out of here, rest up, and have a great day on Thursday. My name is Joseph. Be well out there, guys. Be nice to each other. I'll see you tomorrow. Adios, amigos. Bye for now.